Hi, this is Enrique. Welcome back to another video. Today, I want to discuss a topic that I think will interest a lot of you. So I am a tax return preparer. I am an enrolled agent. I've been doing tax returns for individuals and businesses for at least the last 20 years. And I've helped a lot of people throughout the years. And one of the things that I do find a lot of people that have errors on their tax returns from previous years. They come to me from different accountants. That's how I get the majority of my business. It's through referrals. I do not do a lot of advertising, but I do get a lot of clients that come from different tax preparers. And I usually ask them to bring me the last 2-3 years before I'm able to take them on as a client. So one of the biggest mistakes that I do find when people come in, a lot of the times, these previous accountants, even though they're very knowledgeable, one of the things that I do find is that they miscalculate some of the income, or they misreport it, or they underreport it. So it's very, very important for you as a taxpayer when you're looking for an accountant, for you to be able to have that one-on-one conversation with them and to be able to review. It's very important for you to review the tax returns with your accountant. I feel like there's a lot of miscommunication right now between the accountants and the taxpayers. When they do hire an accountant, make sure you have good communication. Make sure you hire someone that you can trust. I think that's one of the things too, that sometimes people decide to go to any accountant on the street. I think it's very important for you to do your due diligence. Ask your friends and family, ask your neighbors, who do they go to, who do they trust? And also, it also depends on the situation that you are in, because not everybody has a simple tax return. A lot of people have investments, a lot of people have real estate, a lot of people have businesses or LLCs or corporations. So I think it's very important for you to find someone that will fit your need. When you do decide to hire an accountant, make sure that you understand how they work, how their fee structure is, and that you are agreeance with that. Make sure that when you do go over that tax return with that accountant, make sure you verify all your banking information, your personal information. Make sure that your name is spelled correctly. That's something that you as a taxpayer, you're the one that's going to end up signing this return electronically, or if you're mailing it as well. You want to double check all your personal information and your banking information, because sometimes these tax preparers, they deal with hundreds of returns, or sometimes maybe their English is not perfect, but they're very good at preparing taxes. So it's very important for you to verify that information. When you do bring all your 1099s and W-2s for your investments and real estate, make sure that all of that is being reported, that you understand how the tax return preparer is able to get to the end result of the tax return. Like I said again, even though you are hiring someone to be able to prepare your taxes, you want to make sure you have a basic understanding as to how everything is being calculated, because you're the one that's going to be responsible for the taxes. And so that's something that's very important. If you are prone to filing after the April deadline, if you are the type of person that usually puts things off all the time, I highly recommend that when tax season does start, you either yourself file an extension for you individually and your business. If you have an LLC or a corporation, you want to go ahead and file that extension immediately as soon as the tax season opens, that you can e-file. Or you may want to reach out to your accountant if you have a good relationship with your accountant, and have them file that extension for you immediately before they get busy. So if tax season starts at the end of January, give them a call, give them a text message, give them an email, let them know, hey, I'm going to file my taxes after tax season, but can you please file an extension for me immediately? You get it off your back, and you can focus on gathering all your documentation on time. If you are prone to owing money to the IRS or the state, I would recommend that you have a good faith estimate as to what you may owe and try to pay it to avoid penalties later on when you do decide to file after the deadline. If you do have an estimated tax payment obligation, because a lot of people do, if you have a certain amount that you owe, then you are required to make estimated tax payments. I highly recommend that you do that if you do not have enough withholding whether or not you are self-employed or you are a wage employee. I highly recommend that you do attempt to make some estimated tax payments. The fact is the IRS now, they charge underpayment penalties, and that's getting very harsh. A lot of people don't understand that. They come in thinking in April, if they come in March and they prepare their taxes, they're wondering why they're paying underpayment penalties. And that's because they failed to pay estimated tax payments. So a lot of people are not aware of that. They get upset that they still owe a penalty even though they are filing their taxes on time. Also, the interest rates on debt with the IRS. As of this moment, the interest rates are 8% right now. And the penalties are very harsh as well. That's another reason why I recommend that you do this, to be able to avoid paying interest to the IRS, as the interest is very high right now. It's actually absurd. Many years ago, the interest rates were very low. They were in the 3-4% range. But a lot of people thought that maybe they could save the money and then they could pay it later. But right now with 8% interest rates, I don't think it's a very good idea to do that. If you do have a small business, make sure that you take all the deductions that you can. Don't overlook your regular deductions, such as an office and home. I think that's very important. If you do have an office and home, as long as that's your main office, take your deductions, reasonable deductions, whether if it's an exclusive place that you do use for your business, make sure you take it. A lot of people are very scared to take office and home deductions. They think that that's going to trigger an audit. I've done hundreds and hundreds of returns over the years with office and home deductions, and I have yet to get a client that has gotten audited. So as long as it's reasonable, you should be okay. If you do have business vehicles, make sure you take advantage of that. Make sure you use the mileage that's reasonable. Don't use commuting mileage. Remember, that's personal. Anything that's related to the business itself. Download an application on your phone if it's possible. Keep track of your mileage. One of the biggest things that the IRS goes for is usually the auto deduction. They want logs. They want proof. They want everything to make sense. So make sure that you do have some sort of log. Be proactive on this on a weekly basis or on a daily basis. I know it's a lot of work, but it's very important for you to keep track every single day or every single week. You have to keep track of the mileage that you are using for your specific needs for your business, so that if the IRS ever audits you, you have all your documentation in place and you can avoid getting penalized for not having this information. For auto expenses, you can either use a standard mileage deduction or an actual expense method. So usually the standard deduction, for a lot of people, it would be a good way to go. If you do decide to use the actual expense method, that also can include depreciation of the vehicle. So a lot of times you have these larger vehicles, these heavier vehicles, trucks, vans, that it makes more sense to do actual expense method. But remember, you cannot do both. So it's one of the mistakes that I've seen before. I've had clients come in with tax returns prepared from other preparers where they attempt to use both methods. They attempt to get credits for both the standard mileage rate and the actual expense method. Or they'll use the depreciation with the mileage. You cannot do that. So it's very important for you to know somewhat, for you as a taxpayer, to be able to get educated on these types of things so that you know what to look out for. Because remember, just because you go to a tax return preparer doesn't mean that they're properly educated sometimes. Maybe they only have a year or two doing taxes. That's why it's very important for you to be able to find a good person to do your taxes, someone that is knowledgeable, someone that has a good amount of referrals, and someone that you can interview. Sometimes it's not the first person you interview. Sometimes you have to interview several people. So those are little things that I think are very important for you to look for to be able to have a good experience preparing your taxes. Now, if you do decide to prepare your taxes on your own, that's fine. You can use programs out there. There's a lot of good programs out there that you can use. But just remember, tax return preparers, for the most part, they prepare many returns. So they're doing it all the time. It's a lot easier for you to make a mistake versus them making a mistake. Also, another thing you can do is you can prepare your taxes on your own. And before you're filing them, maybe you could find someone to review them. Sometimes that can get very difficult since a lot of accountants don't tend to do that. But you may find someone that will help you. So you may want to give that a whirl as well. When you're getting ready to file your taxes, make sure that you verify all your 1099s, that they go into the correct place. Another thing that I've noticed too is you have a lot of people that are subcontracted, and so sometimes they fail to report all of their 1099s in the correct area. So sometimes on the tax returns, there's an area where you can input your income as other income, not subject to self-employment tax, or you have something called a Schedule C, which would be subject to self-employment tax. So you have to be very careful where to classify your income. There's a lot of subcontractors out there that have filed their 1099s where they were subcontracted. They would file it under the line that shows other income, which is not subject to self-employment tax. That can actually be very dangerous because the IRS, they want their share of Social Security and Medicare taxes on that. So you want to make sure you classify that. If you are filing your tax returns late, if you don't file them on time, I would highly recommend that you try to pull your IRS wage and income transcripts, and you can either actually go on the irs.gov website, create an account with them, download your transcripts for the previous tax year, and double check them with what you have currently. Sometimes not all the forms get mailed to your address, they get lost, or sometimes you just simply forget. Nowadays, the world is so complex. So usually those transcripts, they're usually available sometime between May, June, or July of the tax year that's preceding. So right now, if we're doing let's say we're going to do the 2024 taxes in 2025, those transcripts for 2024, they probably won't be available until around May, June, or July of 2025. So I think that's a very good idea to double check that, because that, if you can verify all that information to make sure that you're not missing anything, that everything matches with what the IRS has. These transcripts have information from third parties that are reported on your social. So you want to make sure that that matches. So that ways, when you go ahead and you file your return, you don't trigger some sort of letter from the IRS later saying that you did not report all your income. So these are little things, these are little tips that I wanted to give you guys today regarding filing tax returns. Now I know that there's some people that watch my videos that are not in the US, so maybe this does not pertain to you, but in your own country, I'm pretty sure that you have to file some sort of return with the government. So whether or not this information is useful to you or not, I appreciate you watching today, and I hope you learned something. I'll go ahead and continue to provide you guys good content that I think that can help you and make you a better person. I'll see you next time. Take care.